Hey folks, my guest today is Kim Hansen. He wants a world where everyone is free to be creative and as a healthy human being they were born to be. He's a serial entrepreneur, innovative company leader, mentor, startup advisor, social community manager, among many other things, including a mountain biker. He's now building a company called cakeequity.com. It's a cap table management platform for startup founders. Kim, you ready to take us to the top?
Absolutely excited.
All right. Did you have like a horror story from one of your first startups in the cap table or what? What happened?
Yeah, definitely it has been a tough journey with equity personally. First, it was hard to get access to invest in the companies I wanted to get access to before I was a sophisticated investor. And secondly, in my other company, I thought I was early, so I could kind of push a bit and get ownership in that. But I couldn't give ownership to all my other employees as we grew the company. And that was a big pain. I tried for 2 years, but it was just too complicated and painful.
hmm Why was that painful? So, like here in the States, obviously, you would have a employee stock option plan. You would issue shares accordingly. We have Carter to manage that. Did you nothing like that existed where you are?
It was some years back. At the time, I was in Portugal building a team there, and it was the maturity wasn't there at all in regards to the cap table management and equity and all of that. So, especially from CFOs at that time, it was just too complicated with tax and all of that. As you're building a company, you have so many challenges. Understanding the value of using options to empower and motivate your team wasn't quite there. So there wasn't enough understanding of the problem. And as maybe some of us are looking to Silicon Valley as inspiration at the time, and saying this is really awesome, this tool. As we're building value, this could be very valuable later on. And who's gonna participate in getting a return in that value created.
So now focused on this capital management for startups. What's an average startup paying you per month or per year to use your technology?
Yeah, we have around they pay 100 Australian dollars for kind of average. Our package is split in the kind of early startups, kind of the ones that are in that product market fit growth place, and then for kind of later stage. But yeah, we're really targeting those that have already got some funding, and they're in that really space where they have too many things to do and they're growing, and they need their cap table to really work well for them, and it's super challenging to learn fast.
So just to be clear, on average, though, these customers are paying something like 100 Australian dollars a month or 70 USD per month.
Yeah.
And what do you upsell against? Is it dollars of funding raised, number of employees managed, size of ESOP pool, something else?
Yeah, so we have a freemium up to 5 stakeholders, as we call them, which is a combination of employees or investors and advisors that are using the equity. After
Mhm.
that, from 6 and upwards, we have different cohorts that you pay as you grow the company.
I see. Okay. And what's the backstory here? When did you launch the business?
Yeah, we actually started as more kind of blockchain company, as we wanted to really, we're passionate about creating more liquidity in the private equity space, and we saw opportunities in the blockchain space. But we saw that there was an underserved demand in Australia for cap table management. There was nothing here, and there was a lot of companies needing that. So we kind of pivoted into building the cap table solution. Also, because in the blockchain space, nobody was kind of solving the legal and compliance and all of those things, which you actually have to solve before you put the platform, the infrastructure for equity transactions in place. So we started with the cap table platform, and it's been growing
Kim,
ever
what
since.
what year? When did you launch?
Sorry, that's so Cake was kind of like three years ago.
Okay. So call it 2018, 2019, something like
Yeah,
that.
yeah, exactly.
Okay. Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right, so the teal is what a VC would pay, yellow is what private equity, and red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise, they sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. Very cool. And have you bootstrapped the company or did you decide to raise?
No, we had a family and friends and fools initial raise in the blockchain. Then we pivoted into Cake, and then we had a pre-seed round and a seed round last year. Now we're going into a pre-series A round.
Okay, very cool. So break those down for me. How much did you raise in the pre-seed?
That was around 500,000.
500 Australian dollars. So got it. So that would have been something like 450,000 USD, something like that. 400 USD.
Yeah, 420, yeah.
And why did you need dilution very well, right? Why did you need to raise that capital to build a platform? Especially, it sounds like you've had some exits under your belt. Why not just self-fund it, keep 100%?
Yeah, I think we were definitely also naive at the time, as I think many founders are in regards to equity and understanding how to use it well. It was a bit of an opportunity also to put a team together, which is really difficult in Australia to bootstrap. I've been living in Portugal for more than 15 years, where it's quite cheap to bootstrap with people, but in Australia the salaries are quite high. So to kind of get kickstarted a bit with a team, we needed some funds.
I see. Okay, so you raised 500,000 early 2021 pre-seed round, then you did a seed round for how much?
Yeah, around 1 million.
Okay, so 1.5 million sort of total raised last year. And most folks in their seed, they're selling, 15, 20% of the business. Is that about what you sold?
So we actually had the initial round, and then we actually had 3 rounds so far: 500K, 1 million, and last year we raised 3 million with Jason Calacanis and Rampersand coming in on board. Rampersand is an awesome Australian VC here, and you probably are familiar with Jason Calacanis and his book about angel investing and his fantastic big launch syndicate of angel investors.
Okay, got it. So before last year, you'd raised 1 million in 2 tranches. Call those your 2 pre-seed rounds. And you did a formal seed last year for 3 million.
Yeah, that's it.
Okay, sold between sort of 15, 20%, pretty standard.
Yeah, exactly.
Okay. Very cool. So that would be, what is that? That's be like a 3 million on like a $15 million pre-money valuation, something like that.
10 million pre-money valuation.
That's fair. And I guess what strategically, why take, what is that? 15, 20% dilution, right? Did that enable you to get in something strategics in that round, or why do the deal?
Yeah, absolutely, and also just get these partners on board, like the VC and Jason Calacanis and his network. So that
you make them use your capital management tool. Is that what you mean when you say a partner?
Well, more as there's a brand there, and there's a huge network of people, and there's a lot of learnings we can get from them in that space. They're obviously really understandable of equity and all of that, bringing that in, as well as we started in the Australian market. We were kind of a service uh, offering in the beginning, sales led, and we had to shift to product led growth, which was a very painful journey until it starts taking off and you get product market fit and all of that, which happened around like 1.5 years ago or something, and then it really started growing. So like as you do that journey, it's not a straight line. You do a lot of there's a lot of challenges to get to that product market fit where you're just trying to focus and you throw a lot up on the wall and see what sticks until you get that, and then you start really making the engine run more and more smoothly as we've been doing the last year, and really understanding all the data and how to benefit well from that.
And Ken, how many customers today?
So we have around 3,000 people using the platform. We have 650 or something paying customers.
Okay, that's pretty healthy conversion rate in terms of product-led growth, right? So what's the paywall? What's freemium? And then when do they see that first paywall? Is it the 6th stakeholder? Is that what it is?
Yeah, exactly. And that depends, of course, typically what stage you're at, or if you want to go and unlock some of the better features as well. Most of the features are in the free version, but if you really need to tap into the power of Cake, then it's good to upgrade.
And 650 customers paying on average $70 per month. That puts you at like $45,000-$50,000 a month in MRR, something like that.
Yeah, we actually at I guess around 70K MRR.
Oh, great! So you'll break the $1 million run rate here by the end of the year for sure, right?
And we have negative net retention rate, so people tend
not negative churn. Maybe you don't want negative retention.
We have a very low churn, and we have the customers keep paying more as over time, which is an awesome thing. So
yeah. So what flip that for me real quick? What's net dollar retention? 100 and what percent?
105%. We have 105. Now. We haven't optimized that or looked at that at all. So that's just kind of awesome to see that there's big potential there for us to grow the engine.
Well, I mean, something like capital management, I mean, that is not something that's easy to rip out once they're in, right? I mean, that's a pain in the butt.
It's extremely sticky. So that's amazing. And yeah, as I was getting into before, one of the big challenges and why we have been needing more funding, I guess, was to go global, which is what we're doing now. So we're in the 3 big hubs of the UK and US and Singapore, as well as Australia, and we've opened in 9 other countries, and we're expanding extremely fast in the world.
If you're doing about $70,000 a month today in revenue, where were you exactly a year ago?
I think around 10K or something.
Around 10. Wow. So you did that funding round at a 13 million post money valuation with 10,000 in MRR.
Yeah.
That's a big, that's a massive multiplier, even for US standards, right? What enabled you to get such a high multiple when you were so early?
Yeah, I think, it's obviously a hot market and all of that. And as we had really strong growth and big support.
But what do you mean really strong growth? I mean, you're big now, but you were only at $10,000 a month in revenue. What do you mean strong growth?
We had a lot of users, and we had like 200 partners in Australia, and there was no competitors really here. We kind of, we're showing that we're winning the Australian market, and we've pretty much done that. We have 20% market share in Australia, that is growing every day. So I think that potential was definitely there.
Mm-hmm. Yeah, no, just for context sake for the audience, that's effectively $120,000 in ARR at a 13 million post money valuation is something like 84x multiple. You're growing into it, but that's
a little bit wrong, but maybe we're a little bit more. I think.
Okay, you were more than 10,000 in MRR.
April, we were at 240 ARR. I think.
Okay, a little higher. Yeah. Still okay, but you're growing. The point is, you have 3 hubs. You're also in Australia. You're growing into it nicely. What's the playbook here to like sell more things to the same customer base, right? What's the next product look like?
Yeah, we're definitely betting on remote teams, as we've seen the likes of remote hiring companies like Deal and Oyster and all of those are growing exponentially. And the whole world has changed to be kind of a globally connected world. So we think less and less about borders and regions and all of that.
Well, but what's the playbook there? Deal, Remote, Oyster, these are all growing very fast. Have you identified a mousetrap you think you can build in that space and get some market share?
Yeah, so we can definitely see, we have our bread and butter, and our awesome product that works really well is giving options to your employees. And Startups should be able to hire globally to tap into a global talent pool. So that's what we can perfectly help them with in regards to the equity. So working alongside these remote hiring companies that we're doing partnerships with is where we can really tap into that growth that is happening there and get our product out. We are strongly convinced that equity should be borderless. Just that we see there's a lot of ideas around the blockchain space to make this happen. Just without a lot of the legal stuff, we put the legal and the compliance.
Yeah, I mean, if you can figure all this out, you save people a lot of time, because the last thing I want to do is go figure out how to issue options to my employee in Bulgaria. I have no idea what the tax laws are over there, and I will never go figure it out.
Exactly. As well as getting investors overseas, so we can just break down the barriers that are currently existing.
What's the team size today? How many folks full time?
We are around 25 people.
And how many engineers?
I think we're 7-8 engineers.
Okay, pretty heavy there. And I guess talk to me more. I mean, go to market. I usually would ask about CAC, but it sounds like a lot of your growth is coming from these partners. Do you pay them a kickback? Are they an affiliate?
Yeah, we have different types of partners. So we have partners that are just kind of referring us, so there's a discount there. And
how big? Like a 30% discount or something?
There's a 20% discount. And then we have operational partners that we work closely together with, that we bring leads to them, and they give us a referral fee as well. And then we have more close strategic partnerships, which depends on the deal.
I see. So do you have a CAC today? Have you calculated that, or no, it's not big enough, or it's not important?
It's less than $1,000, and we can optimize a lot on that as we get our SEO engine working well. This is going to be reduced a lot.
I see. Interesting. Okay, very cool. This is a great story. Let's wrap up here with the famous 5. Number 1, favorite book.
Being Brilliant.
Number 2, is there a CEO you're following or studying?
I mean, it's impossible not to constantly look at Elon Musk and what's going on, whether you try to or not.
Polarizing figure. Number 3, what's your favorite online tool for building cake besides your own?
I would say Profitwell is a fantastic tool.
Yep. Number 4, how many hours of sleep do you get every night?
I sleep around 7 on average.
Okay. And what's your situation? Married, single, kids?
I'm married and have one child.
One kiddo. Very cool. And how old are you?
I'm 47.
47. Last question. Something you wish you knew back when you were 20?
Just start the entrepreneur journey right then, which I think I did, just not very consciously.
Guys, he's launched a bunch of companies, realized how difficult it was to issue equity to both local employees, but more importantly, remote employees. And in today's remote world, he wants equity to be borderless. He's executing on that vision at cakeequity.com. Their last raise was a 3 million seed on a 10 million pre-money valuation. They grew from about $10,000 a month in revenue last year to about $70,000 a month today. So really healthy growth as they look to continue to scale for their 650 customers who use them for cap table management. Team of 25, 8 engineers. All right, Kim, thanks for taking us to the top.
Thank you so much, Nathan. Have a good day.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers, they try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com
/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.